Good afternoon and welcome to First Time Home Buyer Panel hosted by DreamBank. My name is Andy Frisky. I am a senior dream curator at DreamBank. Really excited for all of you to tune in and for our star-studded cast we have today. For those of you who may be first time viewers, I'd like to give you a little bit of context as to who we are and why we are here. So DreamBank is a free community resource located in Madison, Wisconsin, and we are put on by American Family Insurance. The whole reason why we exist is to help inspire people to pursue their dreams. And in large part, that's done through the programs that we offer. So we host right around 25 free virtual events a month currently, right around 40 when we are in our brick and mortar location. And they're organized into 11 different event series. This one happens to fall under our adulting series, which are things that maybe you didn't learn in school or that your parents didn't teach you. But our other 10 series range from our business-related event series. We have a learning lab, which is a how-to or 101 series. Dream Big, which is our inspiration, motivational, and wellness speaker series. We host family-related events, fitness-related events as well, too. So go ahead and head over to our Facebook page, press that events tab. That'll give you a good, concise list of what we have upcoming, as well as everything that we've put out since the beginning of the pandemic, right at the end of March in 2020. But I'd like to go ahead and introduce our moderator today, Katie Powell. So let me pull up her bio here. So Katie Powell works as a product marketing consultant at American Family Insurance. She began her 8-year tenure with American Family as an agent in Mount Vernon, Missouri. She now supports the commercial and farm ranch division by providing marketing materials. And in her free time, she enjoys biking and being outdoors. Without further ado, I'm going to go ahead and kick it over to you, Katie.
Thanks so much, Andy, and thanks for having us today. Thank you for joining us for the First Time Homebuyers discussion. So a few housekeeping tips here for us. Before we get started, if you have any questions regarding the process in regards to buying your first home, feel free to throw that in the chat and we can certainly discuss that. I'm so excited to be joined with our panelists who are going to be answering my questions and your questions and as it relates to first-time homebuyers. So without further ado, why don't we introduce our panelists? First up, we have Kaylie Cleary. Kaylie has been a realtor for the last 7.5 years. And while her job is to help people through the process of buying and selling their home, she doesn't consider herself to have a job description. And that's what makes selling houses so great. Kaylie is a proud cop wife and mom to 2 daughters who all reside on the west side of Madison, Wisconsin. Next up, we have Leticia Guzman. Leticia has been with American Family Insurance for over 19 years, and 15 of those years as an agency owner in downtown Waukesha, Wisconsin. Her office, family, and team consists of 7 licensed agents and 2 agency and community advocates. When she's not running her business, she enjoys running, kayaking, hiking, and riding motorcycles. And last but certainly not least, we have Dan Mattis. He has been in mortgage lending for over 10 years and has worked for all types of financial institutions, from small local banks to large credit unions and mortgage brokers. Dan is originally from Cedar Rapids, Iowa, and now resides in Madison, Wisconsin. Dan is licensed to lend in Wisconsin, Iowa, and Minnesota. So as I mentioned, feel free to throw any questions in the chat. We will certainly get to those at some point throughout today's discussion. But until then, I've prepared a few questions for our panelists, and we'll go ahead and get started. So Kaylie, why don't we go ahead and start with you? Can you give us an overview of the home buying process from beginning to end as it relates to searching for a home?
Absolutely. So I always start with all of my clients with a home buying consultation / questionnaire. So I have a little bit of information about them and what they're looking for, what their situation is, and timeline. From then we'll meet. I usually do about a 60 to 90 minute consultation. We get to know each other a little bit, talk about what they're looking for, talk about next steps. We'll set that timeline. If they haven't gotten a pre-approval yet, I have several people that I know that I can send them to get the pre-approval. Oftentimes buyers come to me with a pre-approval, which is really great. And from there, we'll create a search together, either sitting right next to each other, looking at the MLS together, looking at what the searchable criteria is, looking at pictures of houses so I can get an idea of what their aesthetic is too. It's more than just 3 beds, 2 baths, 2-car garage. So there's a lot of style involved, location, a lot of nuance. And then we will start setting foot in houses. Sometimes it's one house, sometimes it's more, give or take. And then we'll sit down, write the offer together, negotiate that, navigate through the transaction process. Then you're closing, getting your keys and moving into your house. Can take anywhere from 30 days to several months. I usually tell people that they want to start looking about 3 to 6 months ahead of time. In this market being as crazy as it is, which I know we'll start talking about a little later, so I'll table that portion. I tell people if they can start 6 months in advance, just so that we have as much time on our sides as possible.
Awesome. Thank you for that. Yeah, we'll unpack a lot of what you just covered, which was really great information. But one thing you mentioned, and that's something that I'll ask Dan actually, is as it relates to pre-approval. I heard that word come up a couple of times. So Dan, can you help us understand what is a pre-approval? Is that the same or is that different than getting pre-qualified? And then also, how long does that process typically take?
Absolutely. So a pre-approval and a pre-qualification is a great place to start. A pre-qualification is basically a discussion of numbers with a lender. You know, you've said, here's what I make, here's approximately where I think my credit is, and based on that information, here's approximately what I as a lender think you would generally qualify for. It doesn't do a lot of good for when you're going to make an offer though, because it's basically just a discussion, not any verified information. So then the pre-approval is what your realtor is going to be looking for so that they can submit that with your offer, which essentially all starts with an application that can be done in person, over the phone, or as it's been done most of this last year, online. Applications are pretty easy to fill out. It's very similar to an employment application. You know, you're filling out your assets, your income, you know, your history. Essentially what then happens is I take that information, I pull in your credit report, I review that information, and then collect some of your documentation and say, you know, based on this information, here's your pre-approval. You can go out and write offers up to X amount.
Awesome. And then how long is that pre-approval valid for?
So the pre-approval is valid for as long as the credit report is valid for. So typically that's 120 days, 4 months. It's not something that isn't easily redone at the end of that time. So I tell people, you know, like Kayleigh said, this can be a process. Sometimes it's not, sometimes it's quick. Sometimes it's 6 months to 12 months. And if we have to renew it a couple of times, that's really easy, just updating some information.
Great. Awesome. Okay, so my next question is for Leticia. So when it comes to home insurance, is that something that's nice to have or is that a need to have? And then what's the overall benefit to having home insurance?
So that's a great question, Katie. So if you have a mortgage, typically you're going to be required to have insurance, right? So the bank's going to protect themselves with having that insurance in place as well. If you don't have a loan, you don't have to have insurance. You can self-insure. But for here in Wisconsin, the premiums are so competitive that even if people don't have a loan on the home, they have insurance. It's such a small amount of premium to pay to be able to rebuild, you know, what they had. However, if there is a mortgage, yes, the bank's going to require. It's one of the loan requirements is having insurance, right, Dan?
That's correct.
So yeah, and then did you ask about the benefits?
Yeah. What are some of the benefits? Okay,
so major benefits is home insurance is really designed to, you know, to make you whole, right? So you have a fire, there's a catastrophe, a tragic situation where you lose everything. Your homeowner's insurance is designed to, you know, make you whole and to put you as close to where you were before the loss. And so it just allows you to rebuild and not take that financial hit.
Awesome. Thank you so much for answering that.
Sure.
So our next question is, we'll go back to Kayleigh. When it comes to realtors, how do I find the right realtor for me? And what are some of the questions I should be asking when searching for realtors? And how do I know if I found the wrong realtor?
That is a great series of questions. So thank you for asking. I think you should definitely start by interviewing one or more agents. I'm very much a gut person. I think most people know in their gut if they've had a good connection with somebody. Ultimately, I think it comes down to trust. This is a very big financial purchase. likely one of the biggest ones you're ever going to make in your life. And you're trusting a realtor, a lender, your insurance agent, everybody involved with a major transaction. And I really think at the end of the day, you should feel comfortable asking questions to them, and you should feel confident that you trust them. You may want to ask things like, how long have you been a realtor? Do you have areas that you specialize in, or how any type of property that you specialize in? How many clients do you carry at one time? Letting the client know, are you going to be my only client that I'm working with, or do you have 20 clients at one time? How fast do you communicate? Do you have hours of business? But ultimately, I really think most people will know in their gut if they have a good fit or not. If you've got an agent that's not responding to you quickly, during business hours, I like to respond within the hour, if not immediately. But I think communication is going to be the biggest one, and really just your intuition about whether you trust them or not.
Awesome. And a follow-up question for that. If I am buying a home, am I like in a contract with a realtor? Is that something that like we owe each other, that relationship?
Yeah, so we do have a buyer agency agreement. And I tell everybody when I first sit down with them, I go through it with them. I never have them sign it on our first meeting. I tell them all the time. I have several things that I say all the time. One of them is that real estate is a lot like dating, and asking a client to sign a buyer agency agreement with me when they first meet me is like asking someone to marry you on a first date. We need time to build that trust. And that buyer agency agreement is that you're committed to me as your agent, and I'm also committed to you to negotiate on your behalf as a buyer agent. I'm going to negotiate on your behalf, put your needs ahead of everybody in the transaction, including my own, and make sure that your needs are met. And all of that is just put in writing so that everything is clear. But, if we have this contract in place and then a month down the road, buyer or, one of us decides, maybe we're not the best fit, nobody's forcing anyone to work with anybody. So it's really just an agreement in place for now. But again, real estate is a lot like dating. So things can be fluid and things can be changed. Now, not one person doesn't have the right to just unilaterally rip up a contract. We would always agree in writing, just so everything's, again, clear in black and white. But that's the gist of what a buyer agency agreement is.
Great. I love that analogy of dating, especially when with searching for homes and searching for realtors and all of the things that go along with it. I think that's a great analogy. So the next question is for Dan. We've talked a little bit about the pre-approval process, and I'm wondering what role my credit score plays in determining how much I'm approved for. And then to caveat, what's a good credit score to have when applying for a mortgage? And then what are some ways that I can increase my credit score?
Absolutely. So credit is incredibly important to the buying process. A lot of factors go into, what product you're going to qualify for when it comes to loan products, what your interest rate's going to be, what your costs are going to be, and a credit score is a big factor in that. We say that optimal credit is 740 and above. Anything above that will basically get you premier pricing on interest rate, fees, all the loan products of your choosing at that point. That's not necessarily to say that that's the cutoff. Anyone below that doesn't qualify, because that's not the case. There's a lot of loan products for people with lower credit. That's kind of the optimal level and above. Then it kind of goes down in tiers. 680 and above, there's still the majority available to you, and the interest rates are still very strong, and fees will be pretty close to that top tier. And then about everything from 680 to 620 is where you still will qualify. It's just maybe there's less products to choose from, less mortgage products to choose from. The interest rates might be slightly higher. The terms may be slightly less desirable, but in all, most mortgage products are built consumer friendly, especially after the crash of 2010. There was a lot of things redone to make sure that everything was very consumer friendly and driven that way. So I would say 620 and above, you're likely going to find yourself a mortgage. It's just what will the terms be based on those credit scores, essentially. You'd mentioned, a lot of people ask me, like, what's something quick I can do to make my credit better? And the unfortunate answer is you can very quickly make your credit bad. It's much tougher to make your credit good from bad. So the best thing to do is just be as smart as possible with your credit. Make your payments on time. Don't ever let anything go into collections. One easy thing to do is called the utilization of your credit. So with your credit cards, there's a limit to your credit card. if you have your balance is close to the max, that's a negative on your credit. If you can keep that under 30% of what the limit is, that utilization can help your score pretty quickly. And that's something kind of easy to do. So say your limit's at $1,000 and your balance is 500. You got it down to 300, your score is going to increase pretty quickly. So that's one easy thing to do. But if you've kind of gone down the path where your credit is, really damaged, then it's working with a lender on ways to, the long-term rebuild and getting there. But that's just a good conversation to have with a lender, just to kind of set a plan together.
Awesome. And thanks for those tips. One question actually came through in the Q&A in regards to what hurts the credit score, right? So this is going back to our conversation about pre-qualifying.
Mm-hmm.
So every 120 days that credit pre-qualification is good for, does that hurt your credit every time you run that?
So how many inquiries you have on your credit can affect your credit score. Every 120 days, if we're having to renew it, that's not going to be a huge effect. It's like a 5% effect of the overall score. If you have late payments, each amount of 30 days late is worse and worse. So 30-day late payments, 60-day late payments, 90-day late payments, those are going to be major negative factors. Collections are going to be major negative factors. Bankruptcies, foreclosures, those are things that are really going to drop your scores. Inquiries can have a negative effect, but not substantial. So if all you're doing is renewing your mortgage pre-approval, it's not going to have a significant effect. One other good thing that you brought up that topic though of inquiries is a lot of people don't know that shopping should be encouraged, because when you have a mortgage related inquiry for the next 30 days, every other mortgage related inquiry all count just as one inquiry. So it's kind of an encouragement to shop from the credit bureaus. So 30 days is you can get your credit pulled as many times as you want for a mortgage, and it'll only count as one inquiry against that.
Great. Awesome. That's a really good tip. Thanks for sharing that. Okay, so our next question is for Leticia. Can you give us an overview of what home insurance covers and what that is? I've heard a lot of different terms like liability, personal property, dwelling. Can you explain and define?
Sure, absolutely. So homeowners coverage is actually going to protect, for example, like your home, your detached structures, and then your personal belongings, as well as your liability. So for example, the events that could cause damage to homes, and I'll use this, for example, aerial view of just Wisconsin contracts. So you've got power surge to electronics and appliances, vandalism, theft, smoke, fire, the weight of ice, sleet, or snow, hail, lightning, tornado, wildfire, interior, frozen plumbing, or interior plumbing. So like a pipe burst, for example. Those things could happen that could cause damage directly to your home, detached structures, and or personal property. So those are the things that are covered in that realm. Things like injuries on your property is what liability really means. Liability is going to cover our acts of our pets, our children, medical expenses, and then obviously through medical expense and liability, you'll have coverage for claim and defense expenses. And again, these are just Wisconsin based. You'll want to check with your local company to see what specific, coverages are applicable to your state.
Awesome. Thank you for that. A follow-up question for you. I heard the word water in regards to pipes busting, and that's something that I think everyone across the country has experienced over the polar vortex this last year. Yep. Is that like flood insurance, or what is flood insurance? How does that come into play? Okay,
so I can explain a little bit, because this is like one of the biggest questions that we get. So in Wisconsin, so for example, flood. Okay, and again, I'm going to use a Wisconsin contract to refer to. So flood is actually water that comes into your home through the basement, like the walls, the window wells, or the ground. That's flood. Okay, so everybody has a different definition of each word that, everyone has a different definition of everything you can really imagine. So, but that's really what flood is. Water in through your like in your basement, through the walls, window wells, ground. Okay. Now, if you have water damage from an interior plumbing or like a pipe or a frozen pipe, right? And then water enters your home, right? And there's water everywhere. People say, oh my gosh, my house just flooded. But it's not really a flood. Water damage from plumbing or interior frozen plumbing is actually covered off of a homeowner's policy. Again, Wisconsin specific. So those are the types of water issues that you would have coverage for. There are other coverages for water entering into your home. Again, it depends on how it enters, would determine whether there's coverage or not.
Awesome. Thank you for that. So this might be a question for Dan too, when it comes to flood insurance and Kaylee even too. If you're searching for homes and you hear the term like, oh, this house is located in a floodplain, what does that mean? And what should be some things that people should look out for? And that question is open to anyone.
Well, I can start with that one because I'm generally the ones who's making the requirements on the insurance. So with a floodplain, so the important thing is in the flood insurance is required if the structure of the home is in the floodplain. So sometimes, your property backs up to a marsh area, the back, 20 feet are in the floodplain technically, but the home is still, a good 50 feet away from that. So then no flood insurance would be required. If the actual structure, any part of it's in the floodplain, then flood insurance could be required.
Perfect. All righty. Okay, so we're getting a lot of great questions in the chat, and thank you so much for submitting those. We will get to some of those later on, but wanted to touch back with Leticia when it comes to liability insurance. Does that just cover like me as a homeowner, or does that extend to my family, like my kids and things like that?
Sure. That's a great question. So liability is for your guests and people that are coming over to your home. So if there's a slip and fall on the sidewalk, right? Regardless of whether it's icy, too much salt, snow, slip and fall on your property is covered by liability. Okay. And that is for, again, other people, not for you, but for other people or your guests that are in your care, custody, and control while they're on your property. Simple things like my biggest fear always, and I don't know where this comes from, but somebody slipping or tripping over a rug and hitting their head on like a cocktail table, or like a child coming, over at the house. Those are, for whatever reason, my big thing. So I'm always like, hey, put your shoes aside, like get them out of the walkway. I don't want anybody tripping over. So, things like that, maybe spraining an ankle on a trampoline. If you have a pool and somebody injures themselves on the pool, those are all things that could cover, or those are things that could happen to someone on your property that would be covered under liability.
Great. Thank you for adding that.
Sure.
Okay, so Dan, question for you. Once I receive my pre-approval, how should I determine how much house I can actually afford? And does that mean that if I'm pre-approved for $200,000, should I be searching for houses at $200,000, or what are your recommendations on that?
Absolutely. So that's a great question for starters. The one thing I like to do with a lot of my clients is we start with kind of the monthly payment affordability conversation, because I think it's most important, because a lot of people, based on the numbers, what I can qualify you for is basically on a monthly basis. What we often talk about is debt to income ratio. So we take your new mortgage payment plus all your current liabilities on your credit report, and that can go up to about 50% of your gross income. A lot of people, that's way more than they want committed to monthly expenses. And I completely understand that. I'm the same way. So it's good to start with, hey, what do you want to pay on a monthly basis? What would be kind of the maximum you're comfortable with? Where would you really like to be? And with that, we can kind of then go backwards and say, okay, based on a monthly payment, this is really the amount of house you could qualify for. Even though you're pre-approved for $300,000, maybe you want to be looking at $250,000. Interesting question you asked about if I'm pre-approved up to $200,000, what should I look for? Well, I say that varies with the market, which will end up being another conversation we have with Kayleigh here soon. But if the market's where you're having to write offers over the asking price, then you probably shouldn't be looking at houses listed right at what you're pre-approved for. But like I said, I'll kind of let Kayleigh dive more into that when we get there.
Perfect. Awesome. Thank you. The next question actually is for Kaylee, a slightly different topic, but when it comes to having a realtor, what is the benefit of having a realtor versus just searching online at like realtor.com or Zillow? And then can a realtor help me understand if I'm getting a good deal or a bad deal, and things like neighborhoods and schools, and like what kind of input can you give on that?
Sure. So just to make sure, I want to make sure I touch all of those questions. Can you look on Zillow and realtor.com and find a house and get it all done without a realtor? Of course you can. Like, of course you can. If it goes well, it goes well. If it doesn't go well,
It'll go really bad.
It usually has the propensity to go really bad. So I'm not going to be the agent that tells you, no, don't try to do it on your own. It kind of is going to rely on several factors. How quickly do you need to be in a house? If you need to be in a house in 60 days, you probably don't want to go at it alone. If you have a complicated housing situation, you probably don't want to go at it alone. If you take one look at the 20 plus pages of documents and don't understand the legal jargon, you probably don't want to go at it alone. If you don't know a plumber, an electrician, and a home inspector, and title company and all those things, you probably don't want to go at it alone. So not to sound like a broken record, outside of the contracts, and we have the ability to practice law essentially within the confines of the contract. Outside of that, I consider myself a connector. So although I'm not a roofer, I should be able to look at a roof and go, something should be maybe inspected about that. Let me hook you up with my buddy so-and-so, or let me get you some referrals from from agents that I trust to get you somebody who can get you some information about XYZ, whether it's the roof, whether it's the foundation. I feel like my experience comes with having vetted other contractors and other vendors for 7-8 years. So I know who I can trust. I know who I can call and pull in a favor and get them to come out today, tomorrow. I know that I understand my contracts well. I understand, whatever situation can get thrown at me very well. I also know that the likelihood of an issue coming up that I've never dealt with before is very high. And I have an entire network of other agents, lenders, contractors that I trust, that we can all pull our resources and brains together and make sure that everything goes as smoothly as possible. I love a good opportunity to solve a problem. Honestly, it's my favorite thing. I love to call a client and say, this is what's going on, but here's the solution I've already come up with before I've talked to you about it. So have I answered all of your questions? By the way, I feel like there was one more tacked at the end.
Pretty much. So in regards to like the area that I'm searching in, can you give direction in regards to like, is this a good neighborhood, or these good skills or schools and things like that?
So that's a tricky gray area. And my blanket answer is going to be no. Normally my answer for just about any question is it depends. But I'm really not allowed to comment on whether a neighborhood is a good neighborhood or not. It's considered steering. I can't steer somebody into or out of a neighborhood. It's up to a client to decide whether that's a neighborhood that's for them. I tell people, consider, your drive to work. Consider, location close to parks if you have kids. And as far as schools go, it's another one I kind of have to be, tight-lipped on. I really can't have an opinion on if a school district is good or not, because so much of these things are subjective. Everyone's going to have a different opinion about schools. There are tons of online resources for that. And yeah, that's generally one that I have to refer out to some other sources of information for when it comes to whether or not a neighborhood's a good neighborhood or a school is a good school. Now, I'm married to a police officer. So as far as neighborhoods go, I can refer them to the Mattis Police Department or other ones so they can, check out like crime if that's something that's a concern to them. But for the most part, it can't be my area of expertise.
I love how you stated, we stick to the facts, right? And kind of in your beginning conversation with the client of what's important to you and what are you looking for, and really bringing it back to the customer. I absolutely love that. So thank you for sharing that approach. So Leticia, our next question is for you, and it comes with home insurance being wrapped into escrow. So does that mean that home insurance is assigned? Do I have a choice in the insurance company? Do I have to have an insurance agent? And what are some of the benefits to having an insurance agent?
Sure. So I hope I can remember the questions. And some of this will, I mean, as far as like the escrow, I think Dan, you may want to like chime in if I don't use like the perfect description of like what it does. But so yes, you can select your own insurance company. You can always, from what I have known and have experienced over my 18 years, I think you can select your own insurance company, which is, I think, great because like Kaylee was saying, you really want to make sure that you have like that good gut feeling and that like intuition that you are finding someone that you connect with. And I think personalities are huge. Someone who's going to be very go, 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 go and really on top of it. And that's typically what my members want. And so you do want to make sure that that gut feeling is there, right? So as far as like the cost of insurance or the paying the insurance or the escrow, it is typically wrapped. So some mortgage companies will require it, right? That there's an escrow account or not to have an escrow account. I don't think that determination is always the customer. I think that is like the mortgage requirement or loan, correct, Dan?
If I can jump in, yeah, right there. Typically, if you have 20% down or more, you have the option. If you want to escrow for your property taxes and your homeowner's insurance, you are able to. If you have less than 20% down, typically it's a requirement.
Okay. So I would not have had those details. So thank you, Dan.
That's why we're all here.
Katie, did I miss a question?
The only one is, what are some of the benefits of having an insurance agent?
Sure. So that's another great question. So many of my customers and our members here have indicated, in the conversation, I always ask them like, what's important to you? And they'll always say, for me, it's really about not having that online stuff because they are not specialists in the insurance field, right? And so they want specialists, just like they want a loan officer to do that work for them and a mortgage broker, whatnot. They want people to look at their coverage, look at their scenario and make good recommendations. As an insurance advisor, that's what I specialize in. I specialize in insurance, whatever type of insurance it is that you need specific to homeowners insurance today. And I look at what's important to you and I build a custom plan based off of what's required by the mortgage company, right? We have to satisfy that, but also what's important to you. And what you're comfortable with. So that's what I do as an insurance advisor. That is my job. That's why I do what I do for a living, where I know that other members have also said that, the benefits of having an insurance agent specifically is we do all the work for you and we represent you. We put you in a position to be able to recover in the event something happens. My job is to make my members as bulletproof as possible when something happens. Chances are something will happen at some point where they need to utilize their insurance. That's what I'm there for. Brokers, I think, in my opinion and in my experience, have really focused more on the price, not necessarily what goes into it. And for the competitive premium that we have here in Wisconsin, to save $30-40 a year is silly when you could really turn that $30-40 into some great peace of mind. So for me, most of my members that are with me are all about making sure that they have coverage at a competitive premium and they know their options to determine what their premium is going to be. So members have control over their premiums. So
great. Awesome. Thank you for that.
Sure.
So Dan, we'll get back to you. So we've talked about like escrow, we've talked about some different types of loans. What are closing costs though?
Absolutely. So closing costs, the interesting thing is whatever lender you work with, they're going to be different. What comprises them is all the same, but the costs are different depending on who you're with. So kind of some of the typical costs you'll always see are an appraisal. We're always going to have an appraisal done. That's an evaluation of the home. That's one cost you'll see no matter who you're with, unless you don't need an appraisal. That's something you're almost always going to see. An origination fee. With a lot of lenders, this will be an all-encompassing fee of all the lender's expenses. With some, they'll have an origination fee and then a list of the items as well. It kind of depends lender to lender, but when you see origination, just think of that as kind of like the lender's expenses, which typically are a credit report, underwriting, processing fees, flood certification, like we talked about, flood insurance. We're verifying where the floodplains are, if the house is in it. Other fees that you'll typically see are title fees. Now, in Wisconsin, in Dane County in particular, we kind of know generally what those will always be, but state to state, being licensed in Minnesota, Iowa, and Wisconsin, I can tell you each one is drastically different on title costs. So those are set at the title company level, but they'll be required on a different level in each, wherever you're at, essentially. So those are costs you'll always see. Recording fees will be recording your mortgage, recording your deed, which basically makes those things official with the county that your property is in. And then you'll also see prepaid items, which are funding that escrow account we've been talking about, paying your first year's homeowners insurance premium up front. So there's the closing costs are kind of those first ones I talked about. And then the prepaid items are kind of other expenses that aren't costs that the lender's making you pay, but costs that are due at closing, essentially.
Great. I've got 2 follow-up questions for you. So
Yes.
The first one is, are any of those fees negotiable? And then the second question is, do I have to pay for closing costs like with cash, or is that something that can be rolled into my loan?
Sure, absolutely. So with the closing costs, they are all going to be due out of pocket typically. There are a couple loan products that will allow them be wrapped in, but that's extremely rare, I would say. And sorry, what was the first part of your question there?
Yeah, if any of the fees are negotiable.
Sure. So the fees typically aren't negotiable, but what there are fees that you can shop and you cannot shop. So if I say, hey, here are the fees for the title company, you're technically allowed to go out and shop all the title companies and find the cheapest price. I'll tell you, in whatever area you're in, they're almost all the same because they're all kind of priced basically on the same information. But there are fees that you'll have the ability to shop for, like your homeowner's insurance. That's a prepaid item, but you get to go out and make the decision on who you're going with. So while I'm requiring that be paid, it's your decision on the cost.
Perfect. Thank you.
You bet.
All right. Kayleigh, the next question's for you. What are some things that I should be looking for when I tour a house?
Love this question. So I would say that most people are going to make a decision based on 4 factors. So layout, location, price, and condition. Like I've said, I'm a big gut person. I really pay attention to what's your lifestyle going to look like in this house? What's the feel that you get in this house? The longer we tend to linger in a house, the more you can start to get that feel. And again, because real estate's like dating, I often find that when you find the one, you just know. That's not always the case. Not everybody is a hopeless romantic like me when it comes to home buying. But I do find for the most part that it's a gut thing. But even my buyers who walk in the first 10 seconds and go, it's the one, we're going to still pick apart some things. I want to look at, how are the sellers maintaining the property? And I'm going to be looking at, even down to how much dust is on the fan blades, how much are they actually taking care of this property? That's maybe kind of an obscure example, but, was there any questionable DIY work? Does it look like they've hired professionals for some of the updates that they've done? Have they gotten permits for any updates? That tells me a lot about how the sellers maintain the property and what the buyer may expect. And of course, everything always depends. So I never try to speak in absolutes, but it gives you an idea of what you could expect when you own the house. So that's a really big one. When we're touring, I'm looking at things like condition, cleanliness, updates, if I think they've been done professionally. All of those things build trust with a seller. One thing I remind my seller or buyers and sellers about all the time, and it's one of my top 5 things I say all the time, is the buyer and seller are on the same team. Buyer wants to buy the house, the seller wants to sell the house. Ultimately, we all have the same goal in the end. So if we can build trust throughout that transaction, and that begins with the home tour, the better off we'll all be at the end.
I love that. And I love, that's a great reason in regards to choosing a realtor that works best for you, because they can be that extra set of eyes and like, hey, did we consider XYZ? And I mean, that's your expertise. So I love those examples. Thank you. Okay, so Dan, we've got a lot of first-time home buyers that are on this call. So a lot of questions come in regards to down payment, right? So is 20% down like a non-negotiable, or can you do more or less?
Absolutely. So I have a huge note here that one of the biggest misconceptions in mortgages, I need 20% down to obtain a loan. It's not true. It's not true at all, actually. There's many different types of loans, but conventional mortgage is kind of the baseline standard mortgage. As a first-time home buyer, you can buy a home with as little as 3% down. So, that's maybe 2 months rent for a lot of people, depending on what you're buying. But, very typically in your market, what you're paying in rent, a couple months could be 3% down. So there's options from 3% down to literally as much as you want to put down. So there's no set other than kind of the minimums on the different programs. There are even programs that require 0% down. So there's a lot of options out there. It's a great myth to bust that, hey, you need 20% down. It's hey, I need this now. How do I come up with that? And then what can I qualify for based on that?
Great. To piggyback off of that, if you don't put 20% down, are there any additional fees associated with that?
Absolutely. So with less than 20% down, most mortgage products require what's called PMI, or private mortgage insurance. A lot of people will confuse homeowners insurance with mortgage insurance because they hear the word insurance and they think they're the same thing. So the difference is homeowners insurance is your coverage for your home. It burns down, the insurance company is going to build you a new home. What mortgage insurance is actually covering is the lender. So if you have less than 20% down, the loan is considered slightly more of a risk for the lender. So what they're doing is charging you a premium to insure them in the case of your default. Very rarely does it ever come to that, but essentially it's just an additional cost if you're putting a little bit less than that 20% down. And again, just like the credit scores, it's tiered based on how much you put down. So if you're only putting 3% down, that's going to be a little bit a higher mortgage insurance premium. If you're putting 10% down, it'll be a little bit less, 15% down, so on and so forth. But it's also important to know with most mortgage products and conventional mortgage product, that isn't for the lifetime of the loan. It will go away once you reach that 20% equity position.
Perfect. And then is there anything that, like, once we reach that 20% equity, like, do I have to call Dan and say like, hey, I'm there? Or does that automatically roll out?
So there's two numbers that are important. The 20% is when we're eligible to remove it. You call me, you say, hey, we're here. Let's get rid of this. Awesome. Let's do it. There's a little bit of a process there where we need to basically make sure the home is valued where we still think it is, that we've got that 20% equity, and then we can get it removed. So there's a little bit of a process there. If we don't do anything though, when it gets to 22%, which is like typically 4 or 5 payments later, it automatically goes away. So if you forget to call at 20%, it's really not a big deal because you only have it for a couple more months and then it'll automatically go away.
Awesome. Good to know. Thank you.
I think one important thing there though is to know that I bought a house for $200,000. Well, 5 years later, or 2 years later, let's say it's increased value to $250,000. Well, now I have that equity. Not that I paid it in, but I've got that equity. I can request my mortgage insurance be removed because now I have that equity that puts me past that 20% equity that I need. So it's not necessarily just making the payments to get there. It's as soon as we get there, we can talk about getting it removed.
Awesome. So it sounds like there's a couple of ways to achieve that.
Yes,
That's
a few different
really
avenues.
Interesting.
Exactly.
Yeah.
We've been seeing that a lot in the last few years too, of buyers being able to call their lenders and say, my price has gone up considerably and probably at 20% equity.
Yeah, absolutely.
Yeah. It's a wild market out there, isn't it, Kayleigh?
It's a challenge. It can be.
So the next question is really for Leticia and Kayleigh. So we'll start with you, Kayleigh, though. What is a home warranty and what are some of the benefits of a home warranty?
So we have a couple different home warranty companies that we like to use. They cover you in the event that one of the working pieces of your house starts to not work anymore. Let's say, for example, I turn my air conditioner on for the summer and I turn it on, nothing happens. You can call the home warranty company. One of the big caveats across the board is that you don't call an HVAC contractor, you call the home warranty. They're going to have preferred contractors that they work with. I have had home warranties on my own properties that we've purchased. You just call the home warranty company and they schedule and send somebody to your property for that instance. You'll have to pay a small deductible, generally $75 to $100. And then all of the items within your policy that are going to be covered are going to be outlined. If it falls within those parameters, they'll either repair or replace up to a certain value. Everything's going to have a different allotment of value, and it's going to be different than homeowners insurance. It's not insurance. It's really just another company saying, hey, we're going to subsidize some costs of fixing, if your furnace goes out or if you have a leaky faucet. I don't know how many leaky faucets in our rental properties that our home warranty has covered, but it tends to be one of those things where if you don't have it, a whole lot of things are going to break and you're going to really wish you had it. And for $600, it's really just nice peace of mind. I will say I've had a home warranty on all but one of my, we own a few rental properties, all but one of them. And that's the one I've probably had 5 or 6 plumbing visits for one water heater that I should have just replaced. It's one of those things, if you don't have it, you wish you have it. And for the minimal cost that it is, usually like $500 to $700, I think it's well worth it.
Course. And then in regards to like the length of time that warranty lasts, is it good for so long or what are some of the parameters? It is good
for generally 1 year from closing. Sellers can offer it as a benefit to their clients. I often will recommend a seller do that in this market. I still think it's a nice perk. And that'll cover the seller during their period once they've started their listing contract to when they close. And then the buyer will be covered for 1 year. And this is going to be policy dependent, but generally from 1 year after closing. You do have the option usually to renew if you would like to continue to have a home warranty. Occasionally I see people continue to renew them, but oftentimes just get to that first year that you don't become house poor because you went to closing and the next day your furnace went out. Because it happens, because that's life, right?
That's of course life. And I love your example of like the one rental property we have that we didn't selected. Leticia, anything else to add in regards to like the difference between a home warranty and home insurance?
So actually, Kayleigh's comment, we bought a property in December and 40 days later, coldest day in January, our furnace went out. So the home warranty did cover a really significant portion of a new furnace. So go warranty all the way. But I'm also an insurance agent, so I always talk about the warranties and insurance. But so your question as far as just homeowners coverage, right, Katie? Was there anything specific you wanted me to, or was there a question specific?
Yeah, is it really in regards to like the homeowner's insurance policy? So like, let's say my furnace goes out. Does it matter like why it went out in regards to like it's covered under the warranty in this case, or it's covered under home insurance in that case?
Thank you for the clarification. So yes, warranty and insurance are completely different. In order for a homeowner's policy to pay for a loss or damages or for repair, it really has to be covered under those covered items, or what your contract will say is covered perils. What is covered under the policy? So if any of these things happen that cause this, then you can pay, then your insurance policy will pay out. So typically if like a furnace goes out or whatnot, and it's not due to fire, vandalism, windstorm, hail, that type of thing, then it's not covered under an insurance policy. So the warranty and the homeowner's insurance, they complement each other really, because usually in most cases, if it's not going to be covered under the warranty, sometimes you'll have coverage on the insurance. Again, it's all about what was the cause of loss, and that determines whether there's coverage or not on the homeowner's policy.
Perfect.
Does that help?
Yes. Yeah, that's perfect. Thank you.
Sure.
Okay, so Dan and Kayleigh will spend a little time with you guys in regards to like just the overall market and landscape of the home buying place, right? So we're seeing interest rates super low. We're seeing competitive markets all across the land, right? Not just in Madison, Wisconsin, but truly everywhere. So, Dan, we'll start with you in regards to interest rates. Is there any way to lock in interest rates, and how far in advance can you do that?
Yeah, locking in the interest rate, something we can do once you have an accepted offer to purchase a home. So what actually Kaylee and I are working on right now, though, is a new construction. Of course, someone's building. They're not closing until August. There are lock options up to 12 months out. Things will vary on those, pricing wise on what it looks like. But yeah, you can lock an interest rate up to 12 months out. Typically what we see is about 60 days is a standard lock. 30, 60 days. Anything beyond that's kind of considered a long-term lock. But if you've got a property that you're building, for instance, it's a good option to have that you can, hey, I don't know what interest rates are going to be 9 months from now. I better lock this in now and have the peace of mind that if they go up 1%, hey, I already got it locked in.
Perfect. And then Kaylee, a question for you in regards to like the overall market. So obviously, Madison, Wisconsin, the best. But what expectations should a first-time homebuyer have specifically in this market when searching for a home?
That's a great question because I think the expectation is the key. If you go into this bright-eyed and bushy-tailed thinking you're going to be getting the keys to a new house in 30 days, you're going to be disappointed and frustrated. If you go into it with the expectation that I might need to have to write 3, 4, 10 offers, I may need to start 6 months in advance. I might need to have to go over list price. I might need to have to loosen some of my contingencies to make my offer more competitive. You're going to have a way easier time knowing the challenges ahead of time and having the expectations set. It's going to be dependent on the price range you're in. Some price ranges are going to be more competitive than others, and this is going to be location dependent for us, really up to like 350, 400. In that first-time homebuyer range, you have such high demand and so little inventory that you're seeing properties with a dozen, 25 offers. It can even get really competitive with 5 offers. I've for example, and of course, everything depends. So this is just a random example, but I've written 30,000 over list price on a house that had 6 offers, and my client still didn't get it. The sure thing that we thought that we were going to get, and ultimately they decided that was really scary. That felt like we threw everything we could at it, and right out the gate are really getting kind of kicked when we're down, and we're going to just build a house. So I really also set the expectation that if you have time on your hands, building may be a good option. I know that lumber prices and materials prices are high, but you can get through it and have a contract in place and know what you're getting, and don't need to have the unknown of, I don't know if and when I'm even going to be into a house. So building is a good option, but really setting the expectation based on where you're looking. I mean, if it's going to be in the heart of Madison, there's going to be more competition. It'll decrease as you go out geographically. Smaller communities, you're going to probably see a little bit less. Again, it depends on where that is. But yeah, expectations are the name of the game.
Awesome. So we have a lot of great questions coming through on the chat. So I wanted to spend some time to ensure that our audience has their questions answered. Leticia, why don't we go back to you? This is a fun question when it comes to umbrella insurance. And if you can give us an understanding of what is umbrella insurance and how that relates to homeowners.
Sure. So an umbrella policy, it's funny because I always draw it out on an insurance review, and then draw it on an umbrella, and then I put your home underneath it, and then your cars and whatever your gadgets are. And I'm not an artist, so it doesn't always look pretty. But so if you can envision your underlying policies like your home and your auto here, and then an umbrella literally, or even a circle around it. The umbrella policy is there, and it's designed to provide you that extra layer of coverage for injury, bodily injury, in the event something happens while you're driving and the lawsuit comes over. We've injured someone, and the lawsuit comes over, and it has exceeded the dollar amount that your policy covers, right? So once that's exhausted, then you're kind of there to cover everything at that point. If you have an umbrella, the umbrella is literally going to attach itself to that claim and provide you with an extra $1 million in liability protection for the injury or the claim defense or the lawsuit expenses, attorney fees, whatnot. Under a homeowner's policies, the same thing. You have a claim. So for example, a slip and fall or injured on trampoline, right? There's injury. We pay out the limits up to the policy policy limits that you have and which you selected. And after that, if the lawsuit has exceeded that dollar amount of, let's just say, $300,000, and the lawsuit comes over for $500,000, instead of being responsible for that deficit of that $200,000, the umbrella just comes in and it gives you that extra layer of protection, and it provides you those coverage, the coverage amount that you need. So it's literally just a layer of protection over and above what you already have in place.
Perfect. Thank you for that.
Sure.
Okay, so Dan, a couple of questions for you in regards to like the pre-approval process. So whenever someone's getting pre-approved, and I'm summarizing a couple of questions, but whenever someone's in the process of getting pre-approved, can a mortgage broker help identify any first-time home buying programs that you might qualify for? And then let's see here. And then, really, what are the steps to get pre-qualified? Is that just a conversation with you?
Yeah, pre-qualified, again, is just more of a conversation. Again, you're not going to be able to go write an offer being pre-qualified. So the pre-approval is really the process where you're filling out an application, providing documentation. Typically what we're needing is, your last couple of pay stubs, your last couple of W-2s, last couple of years of tax returns, and last couple months of bank statements. So those are the things that we very typically, for a very standard borrower, will need. So we'll collect those things, have an application, and then what my job is to look through and say, hey, here's everything that you could qualify for. Let's look at it all. Let's put it all side by side and say what makes the most sense for your situation. When you're talking about some programs, of course, a lot of programs for, like home buyer assistance, down payment assistance are kind of provided by local, state, municipal governments. So those will vary greatly depending on where you're at, but your mortgage lender should be aware of them and should keep you posted on if those things are available.
Great. Awesome. Thank you. So we unfortunately won't have a chance to get to all the questions in the chat. However, I did want to ask each of the panelists, what is one thing you wish more first-time homebuyers knew about buying their first home? So Kayleigh, why don't we start with you?
So I took some notes on this question, and a couple of things I've already touched on. The big one, buyer and seller on the same team. I know we already talked about it, but I feel like I can't stress this enough. You want to buy and they want to sell, and there are an infinite number of possibilities of how we can get from A to B. There's many snags along the way, but just about everything that we encounter has a solution if everybody just collaborates together and just keeps in mind that we're all on the same team. It's going to take some patience, and it's totally attainable. And again, there's very few problems that we can't find a solution to, as long as everybody comes in with the mindset that we're all going to work together, and keeping a positive attitude.
I love that, attainable, right? So it's something that we can do and we can accomplish. So I love that. Leticia, do you want to share what you wish that first-time home buyers knew?
Sure, absolutely. So just a couple things. So keep in mind that insurance advisors are educated, trained, and we specialize in customizing plans. We have everything that you need. It's just a matter of what's important to you. Homeowners insurance coverage in the state of Wisconsin, as I said earlier, is very, very affordable. We have very competitive premiums, especially at American Family. And so I highly recommend that you take the opportunity to make sure that you are looking at your homeowners insurance on a yearly basis. The one thing that I always find is that when you're just getting into a homeowner's policy, there are things that are just very important to you and nothing else is really important at that time. But a year later, your homeowner's insurance policy should kind of grow with you as your life changes. And so keeping those things in mind is that you also do control your premiums on your insurance. And there's so many ways to get like the best coverage and minimize that premium. So that goes hand in hand, and that's really, really important. And that's why it's so important to have an insurance agent, because they are going to be reaching out to you and they're going to be asking you, are these things still important to you? And maybe after a year in living in the home, things are going to come to surface, and you will find things that are important to you now, covering that are not important, that weren't important to you when you were first getting in the home. So that's kind of one of the things that I wish everybody knew, is that you do control those premiums, and that relationship that you have with your insurance agent is extremely important.
I love it. So it's not a one and done, right? Like I've got my insurance and I never have to think about it again. So
I mean, it could be, but you're not going to be happy if something happens.
we don't recommend that. and Dan, love for you to finish off the question in regards to what's the one thing you wish folks knew?
I think that the one thing that a lot of my clients say to me that I wish more people were aware of is, in all honesty, when you're renting, your mortgage payment will very likely be at or below what you're currently paying for rent. So, I mean, what you do when you buy a home and you get a mortgage is you're building equity. A part of your payment goes to the principal of your loan, and every one of those payments, your ownership interest in that home gets larger. When you're renting, you're paying that mortgage for the landlord. So it's basically what you want to pay the same amount and build equity and build wealth. That is really, I think it's just most people don't know until they own that. Hey, I can already afford this. I'm already paying it.
Love it. Great tips, everyone. Thank you so much. And thanks for the questions from our attendees. And thank you to our panelists. I would love to turn it back over to Andy from DreamBank.
Thank you so much, Katie. And thank you all for tuning in today. What a wonderful event. Lots of great tips from various perspectives of the home buying process. Thank you, panelists, for preparing for those questions. I want to go ahead and highlight a couple things. First off, again, to recap the events that we have posted at DreamBank. So head over to our Facebook page, facebook.com/DreamBank Madison. Press that events tab. That'll give you a good, concise list of what we have coming up. In addition to that, you can go back to when we first started streaming all of our events. So the last week of March in 2020. Also, we're going to be going ahead and putting in a copy of a new Homebuyers checklist and process that American Family have put together. It's such a great resource and complements what these panelists discussed today very, very well. With that being said, we'll go ahead and cap the event right there. Thank you again for all of you for tuning in, and we will see you all next time.